Today we are going to discuss the same technical analysis but for short term trading. A short term trading can be few hours of trade, few days, few weeks, maximum a month, 2 months, 3 months, that's all. Within a quarter, the trade ends. If your target doesn't reach, if your stop loss doesn't reach, you will have to exit by end of 3 months, that's all, and go into another trade. Now, this theory is by Mark Minervi. I hope all you guys have got the material, whichever that I've given. Regarding the books, there is huge resource of books worth more than a lakh, which I've already shared with you. Kindly check your email. In case you haven't received it, do let me know. Now, where can you find the books? Here in this URL. So this I have directly shared the Google Drive link. It's open to public. So many books are there that you can read to your entire life. Okay. It's only in case you have got passion. Otherwise, whatever that I'm covering is more than sufficient, guys. More than sufficient. Amazing resource. This is an excellent book. So around some 600 pages book. I have read a Intelligent Investor and this one. Both Benjamin Graham is guru of Warren Buffett. So Warren Buffett has learned from Benjamin Graham. He has explained every detail so theoretically that even one page if you read, you feel like sleeping. Okay? It's very slow, very much say philosophical, very much in detail explained every concept, a documentary type. Anyway, so it's only about your passion. In case you really love reading, then this is a good source. You don't require anything beyond this. All right, so and then there are some books which I've already shared in my folder itself by Mark Minervi. Yeah. All right, Darvas and Nicholas Darvas Trading and Mark Minervi. Both the books are available to you. And the exercise of mutual fund is also shown here. Okay, anyway, let's resume where we left. Write down technical analysis for short term trading. Now, before I forget, there's an important point here. So, only you both are listening to the class, and Praveen would not be available from tomorrow. Okay, till 30th of November, is it? Yeah, so he's going to Tirupati. So, then Vijay would only be left. So, what we can do is we can pause the session and we can resume from 1st of December. Hardly there are 3 more sessions left anyway, but still. Is that okay for you, Vijay? Okay, so let me just put down in the chat window. When he sees, he may reply.
He replied as yes, sir.
Okay, all right, fine then. And kindly, the last installment, whosoever fees is pending, kindly clear it. We are in the last few sessions now. So, technical analysis for short term trading. There are various theories of doing technical analysis for making income through trading. However, among all, the most successful has been Mark Minervi, a well known veteran trader with excellent track record. Sometimes he posts his view also on the stocks and on the overall market trend, and majority of the time he gets it right. So I want you to follow his handle. Minervini. Volatility compression. Not at all. So VCP, volatility compression pattern, beautiful word. So what has been observed? So what has been observed by Mark Minervi is every particular stock goes into contraction and expansion phase just like an heart. Our heart also contracts and then expands, contracts and then expands. So like such are the stocks. Unlike what I have been saying till now, till yesterday, I was always saying that buy the stocks which are cheap, buy the stocks which are cheap, buy the stock when they are coming into support zone. His theory is totally opposite, guys. His theory is totally opposite. So do not get confused here. What we discussed till yesterday was all for investment purpose where lot of patience is required. That's the reason why at last I shown you a chart of Goldium International. Okay, 4 years it was lackluster, 4 years, and then suddenly in 1 year it expanded by 4 times. So imagine the level of patience that you require there. Here it is not about patience, it is about fast money. It is like T20 match. Yesterday was all test match. So now we are going to play T20 match. He says, buy the stocks which are with full of energy. Buy the stocks which are very expensive because we are not marrying that stock. We are just taking the advantage of the momentum, the speed what the stock has got. The speed slows down, we exit. The speed continues, we remain invested. Now that speed may continue for 1 hour, it may continue for a day, it may continue for 10 days, it may continue even for 2 months, 3 months also, we never know. He says that till that momentum we see, we remain there, we see that there is a loss of momentum, the stock is going back into the contraction zone, we exit. That is what his theory says. It may sound very interesting and fascinating for you. Till yesterday, sir, it was all very boring game, test match. I love T20. I love this kind of fast money. But remember, in T20, the wickets also fast frequently. So here when you are playing, it is very, very dangerous and risky game. Because there will be times wherein your money will be hit badly. Back to back loss making trades. Maybe within a month you will lose 10% of your money. Then there will be good times also where within a month you will make 10% of your capital. So this is not so easy game. Only risk the amount which you can afford to lose. It is meant for the people whose primary source of income itself is stock market. And how many people are successful in it? Honestly speaking, less than 10%. So do not have high expectations. Always do a lot of paper trading. Discipline is very important. Risk management most important. Your target is to get 60% success, that's all. Do not aim for 80-90%, it is not possible. Even he has a success ratio of only 73%. Mark Minervini has a success ratio of 73%, who has been trading since several years, who has won lot of championships. He is considered as one of the most successful trader in America. Which also means that most of the successful traders' success ratio is less than 70%. Because with 73% also, if he is number one, then others definitely fall under this figure. Of course, the risk reward is like 1:2, 1:3. By that way, even a 40% success ratio would give you a lot of profit, but a 73% with 1:2 risk reward is remarkable. But it's not an easy game. Always understand that. So this theory is applicable even for intraday trading. I've seen a lot of students showing interest in intraday trading. Well, it is all gambling, but skillful gambling. There are people who make money even in betting, but how many? Only 10% people. I do not want to discourage you stating that you cannot be into that category. Definitely you can also be in that 10% category. But how much control do you have on yourself? Because here emotions doesn't work. You have to be trading like a machine, like a robot. In investment, you can be a little emotional. But here, never ever be emotional. So do I do it? Yes, I do it. But how much? Only 5% of my capital I use for trading. 95% of my money I only use for investment. And in that 95%, 15% I use it for F&O. All hedging trades. I made more money in hedging than in this VCP pattern. Not that I made loss, I did make money, but the return percentage wise, I made more money in hedging. Maybe because I'm not able to give so much time, not able to focus. Because during the trading hours, there are a lot of trades that I have to punch for my clients. That could be one reason. But even otherwise, I love hedging trades more than the VCP or the short term trading. So it is all your choice. If your capital size is good, then I would definitely advise go into for hedging trades. That is more interesting, more professional, and the chances of success is more than 50% there, and it is easy. Only little bit you have to be sharp in calculations, and that will come out of practice. But here it is all about focus, observance. You have to continuously, day in and day out, from the time the market opens till the close, your focus is all on chart, chart, and chart. But in hedge trade, it is all focused on calculation, calculation, calculation. Even though you are wrong or you punch a wrong order in hedging, you can still survive. But here, by mistake, you enter a wrong trade, the hit will be bad because you are taking a leverage position. If you have 1 lakh, you can trade with 5 lakh when it comes to intraday. So whether you gain, it will be 5 times, you lose, it will be 5 times. So play very judiciously, use your money very carefully, and have a proper balance. There will be time, again I repeat, there will be time where back to back trades will go in profit, there will be time where back to back trades go in loss. What do you do after that will define your psychology. If you are changing your strategy after that, it means that we cannot become a successful trader. Because with the several books that I've read of successful traders, this is one point which I find in common every time, every trader says this point. Emotions should be totally zero. It's just like a doctor. There's a saying that doctor cannot operate his own family. His hand shivers. Why? There are emotions. Even the best of the best doctor will not be able to operate well. So emotions is a big drawback when it comes to skills. How much ever good you may be at any particular skill, but emotion when you bring in, then that skill is not going to pay you that big. Even it happens in sports. You become emotional, then you will not perform. You have to be only focused on what you are doing. That is it. Talk about a soldier. If he is emotional, then he will not be able to fight. The same thing happens even in trading. You see that you have a good control over the emotion, go for it. And what is your level of emotional understanding, that only you know it. So neither it is me who can judge nor anyone else. It is only you yourself who can judge whether you can become a successful trader or not. And the test to this is, I told you, back to back losses, back to back profit. How are you reacting to it? That is the test for it. 90% people fail in this test. So please test yourself also. Test with a very small amount so that you don't lose big. And hedging anyway, I'm always there. And your investment, I'm always there to support you. Alright? And in case, like if you are already engaged in job, you are already into business, then I would always advise, do not do any VCP pattern, do not do any short-term trading, because you will not be able to focus on business. But if stock market is your primary source of income, then maybe you may have to do this. But as a friendly advice to give you, stock market should always be secondary income. Even if you want to do trading also, VCP pattern also, it has to be done seasonally, not on every day-to-day basis. Because the real business, when you do it, you learn a lot of things. You are meeting hundreds of people, you are roaming in 100 different places. There's a lot of learning and your mind is going to be fresh. The more you go on trip, the more you expose yourself to a lot of people, your mind always stays fresh. But the problem with the full-time trader, there are a lot of people who are only full-time trader. 24/7, their friend is laptop. system. So there's no human interaction, they're sitting at home, then their entire mood for the day depends upon the trading day, how they have made money or they have lost money. And there are a lot of people who come under depression also. I've seen myself within my own society and my far relatives who have lost huge money in trading and who have come under depression, and till date, that effect is there. So be very, very careful in this game. Okay, remember, it's more dangerous than even T20 match betting. There we can watch the match and we can make out what is happening. Either you are right or you are wrong. Here it's not two outcomes, there are several outcomes which may happen. So what is going to happen to the stock today? It may either rise by 1%, it may rise by 10%, it may rise by 20%, it may fall by 1%, 5%, 20%. Anything may happen. The outcome on the top is the sky, and underground till deep, till the core. Anything can happen. There's a broad range of it. But match is defined. 20 overs means 20 overs. Either win or loss. But here there's lot of reading required. So according to him, only chase the stocks where you see the action. 80% of the time, important point, 80% of the time the stock is in stagnant period, while only 20%. So his advice would be to buy the stocks which are already very, very expensive, which are very close to their 52-week high. Why? Because he says that we are not marrying the stock, we are only holding the stock only for some time, that's all. Till there is fire in the stock, we remain with it. The fire goes away, we exit from it. So that is his first condition. Buy the stocks which are very expensive, which are already trading near the highs, lifetime highs or 52-week high. 80% of the time the stock is in stagnant period. That means the stock does not have any motion. It goes up, comes down, goes up, comes down, goes up, comes down. Nothing but it is oscillating, oscillating, oscillating. But 20% of the time it is one way trending. Either it moves one way up or one way down. So whenever that action comes, one way up, we enter into it, or one way down, we sell into it. Okay, if it is for intraday, we can even sell first and buy later, even though we do not have the holding of the stock. So in order for any stock to come into your watch list, here I told you fundamental zero value. You can note down this point as well. Quickly note down. Today we'll be only seeing the watch list, how the stocks have to come in the watch list, then patterns and all we'll be discussing from the next class. So according to Minervi, a stock is considered to be having full energy or strength when the first condition, that is the stock must be trading at 52-week high. That means in the last 1 year, if you look at the chart pattern, it should be trading at the top. And if it is at a lifetime high, example IIFL Finance, which I have recommended to the students even in the group, when it was trading at 110, 2 years back. So this is trading at a lifetime high, okay? And this qualifies well for, according to Mark Minervini, meaning the target for this stock comes to approximately 700 rupees within a year, according to the VCB pattern, okay? And I have been recommending the company. I am very having high expectations from this company. It's already rising by 5% every day. So I recommended at 40 rupees, right? Yeah. This was an opportunity for you to enter yesterday. What is the price today? Gufic Bio. It's an excellent company, guys. It's already started rising, but it can go a long way. So first condition is the stock has to be very, very expensive, and that is expensive only when it is trading right at the top. Point number two, with time the momentum of the stock should increase. The stock should be from last 200 days moving average. What is MA? Moving average. Average price of the stock in the last 200 days. That is called as 200 DMA, 200 daily moving average. 100 DMA means 100 daily moving average. Likewise, we have got 50, 20, 10 and even 5. Okay. So the stock should be gaining more and more strength as and how it is proceeding with time. The performance should be getting better and better. The energy should be increasing. That is what this condition would mean. Minervi always says the young generation is very lucky. Why? Because nowadays we have got screeners. We can directly put this condition, and that screener will hunt all the 7,000 stocks and give us only those stocks which are satisfying this condition. He said that when he started trading, he used to sit under the light till midnight and then find out which chart pattern is meeting this condition. That is how he used to work. For us, it is all computer, click of a button because of the technology. So technology makes jobs very simple. The stock must be at least 50% away from its 52-week low. Let's say that the stock 52-week low is 100 rupees. It should be trading minimum 150 plus. The stock price must be above all the important moving averages. See, the alignment of the moving averages should be as such that 200 DMA should be at the lowest, then above that should be 100, above that should be 50 DMA, then it should be 20, then it should be 10, above that should be the share price. That is how the alignment has to be. That's a perfect alignment for VCP pattern. We don't buy right away. We'll have to see pattern also. This is only for watch list. Tomorrow if I want to buy any stock, which stock out of 7,000 stocks, which stock should I be buying? For that, this is the condition. This is a test, this is an examination for the stock. If it satisfies all this, then please come to my screen. Let me see your chart. And if I find a VCP pattern, I will enter, otherwise I will not. So for you, as a trader, stock market is only these companies, not 7,000 companies, not Nifty, not Index, no Dow Jones, no Nasdaq. This is the universe of stock market for you. That kind of dedication, focus is required, is what Minervi says. If there are certain stocks, 20, 30 may only come in the screen. Then he's not bothered what is happening. No television channel, no newspaper, no breaking news, nothing. Only 20 stocks is his universe for that day. That kind of dedication is required, guys. So let us see how can we get all these conditions right. So the best site I told you for technical analysis is charting.com. Now I am going to share a screen with you where all these conditions are already meet. So you can also create one. Just you have to register in charting.com. Then under scans, you will be able to create your own condition. There are so many screeners that I've created for myself. Minervi. Look at all these conditions. So I've even put the condition as 5. We can make this as 10. There's nothing but simple moving average, daily moving average, both mean the same. Latest close greater than, let us start from the bottom. Latest close greater than minimum 365 than latest close into number 1.5. So this particular condition will ensure that the stock is trading at least 50% higher to 52-week low. That's what this condition means. Next condition, it is very close to 52-week high. That means it is only in 25% range of 52-week high. You want within the 20% range of 52-week high, 0.8. So I am directly sharing you this screener. I put that in the chat window. Kindly save it. This is going to be useful for you for lifelong. So 10, 20, 50, there should be another condition, that is 200. 200, 150, 20, 10. So 10, 50, 100. $20. So what these conditions will ensure? That the price is trading above all these moving averages. So already we have put this condition, so we don't require this. And then moving averages. We have already put the same conditions here, that's why I'm removing it. So far, what does this signify? That the price is trading above 10 simple day moving average, 20 simple day moving average, 50 simple day moving average, 100 simple day moving average. 200 simple day moving average. This is what this condition means. Yeah, this is what that condition means. Then 50 DMA. First of all, let us start from the minimum amount. 100 SMA should be greater than 20 SMA. SMA, DMA, both are same. And then 20 should be greater than 50. Alright? And then 50 should be greater than 100. And then 100 should be greater than 200. How many stocks have come? 129. So for us to trade, these are the only 129 stocks.
Sanjay, can you tell me the this second lot of like SMA close this thing?
Yeah,
What it is?
let me tell you. So what exactly is SMA or DMA? 200-day average moving price. Let me directly show it in the chart, it will be more clear. So we'll take one company, say Vascon Engineer, or we'll take some high price company, take Smacko. Railtel Corporation of India. Let's have a look at this. So what I'm doing is, I'm adding all the moving averages so that we know what exactly are we talking about. See, now these are all the lines which are nothing but the moving average. What is the red line? 200-day moving average. That means in the last 200 days, what is the average price of the stock? That is what this line means, red color line. Clear? Likewise, 100 day, in the last 100 days, what has been the moving average of the price? That is what is your blue line. So let us say at this particular point, you can see all the values here. So what is this moving average? 102.6. That means from today, in the last 1 year, 200 working days, okay, Saturday, Sundays off. That means let us take approximately that there are 200 working days in a year. That means in the last 1 year, what has been the average price of this particular stock, Railtel? 102.56. Sometimes it was trading below that, sometimes it was trading higher than that. See here, it has traded below, it has traded high. But if I mark one uniform line, then on an average, the price of this stock has been 102.56 in the last 1 year. Likewise, in the last half year, the price, half year means in the last 6 months, this chart pattern, average price is 106. Likewise, last 50 working days, price is 115. 127, 133. So look at this, this is in ascending order. From top to bottom when I go, the moving average is increasing along with the time. That means the stock is gaining lot of strength. That's why you see this kind of pattern. Every stock in Mark Minervi with this condition, you will see a Ramdev Baba yoga position. Okay, so that is exponential. It will be moving like this, like a rocket. So that's what he says, chase the rockets. Buy the stocks which are with full of energy. So you'll find all the charts very, very expensive, trading near the highs. So like this pattern, if you want it, this is the condition for it. And then above all, the price. The price should be above all of this, which is 143.5. This is trading right at the highest point. Is it at the 52-week high? It is at the lifetime high, to tell you. Do we buy it? No, we are not yet seeing where the buy and sell is. There are 129 stocks. In that, maybe only 20-30 stocks are eligible for us to enter. That VCP pattern, we have not yet come into it. We are only looking at the condition. Which stock should I be scanning? What stock should be in my radar? What stock should I be putting on my screen for trading? That is what this says. What should be my homework for the day? Not 7,000 stocks, but these 129 stocks. Clear? So clear with the condition of the moving average. Any stock you see, it will definitely meet this condition. This will be in ascending order. And out of 7,000 companies, the beauty is that only these stocks are meeting that condition. See here, all like a rocket would be moving right at the top. To tell you, this is an excellent VCP pattern. We'll later talk about it. 51, 60, 66, 71, 73, 78. Okay, amazing. Any stock you can check like that. IRCON. 41, 42, 45, 51, 55, 61. Okay, see the rocket? So this stock also is forming an excellent VCP pattern. This would be your stop loss. Later in the class we'll be discussing how should you be marking our stop loss and the entry exit. 412, 514, 560, 596, 596.96 and then 650. Excellent entry. Skipper. So 63, 64, 71, 72, 76. Alright. Let all the charts will be able to see that it would definitely be meeting the criteria. Som Distilleries. Excellent pattern. Okay, here also. It's called as 1T pattern. 7800, 114, 115, 119, 134. So this what is the first condition for a stock to qualify for you to trade. Alright. The next write down, what are the VCP patterns? Volatility compression pattern conditions. There are 4 types of VCP pattern for us to trade. Hold on. हेलो बोलो जी. हाँ डाल सका डाल दूँ. हाँ और डाल दूँ बेटर है. हाँ पूरा डाल दूँ ना. ठीक है. हाँ हाँ देख कर डाल दो. हाँ हाँ नहीं मी आता इमू डाल रही दूजा टर्मिनल डाल रही. हाँ 298.95. हाँ रख. Sorry for interruption, guys. There was an order to be filled. The order which I fed just now is worth 40 lakh, single order. One of my clients' order. Okay. So there are four types of VCP pattern for us to trade: cup pattern, cup and handle pattern, cup handle and handle cup. So cup handle and cup handle. What's the meaning of cup handle and cup handle? Pattern is like this. First one wave, secondly one wave will be there, third there will be one more wave. For the first wave, what is the handle becomes a cup for the second wave. It will be clear when we go into the charts and see. Firstly, note it down. So these are the four types of charts that we will be seeing. If that kind of chart patterns are found, we will trade into that stock. Otherwise, we will wait for that pattern to get formed. Every day, at least 8 to 10 stocks you will see which are forming such kind of patterns.
What is this 1T, 2T, or 3T?
Time pattern. One wave T pattern, one two wave T pattern. He just named it as T. But that means one cup, two cup, three cup like that. So let's have a look how these patterns look like. Even if you go into Google Charts, you should be able to find it. This is your 1, 2, 3 T pattern. Okay. This is your 1 T pattern. So how many waves you have got? That many T's it means. This is 2T. Okay. So this is cup, this is handle. That's how the pattern should look like. So this is cup, and in case the price moves higher than that, then this is 1T pattern. But if the price moves like this, then it becomes 2T pattern. He is Mark Minervini. Okay, here we can see. So this is your 1T pattern, guys. So the stock moves like this with a rounding bottom, okay, and a particular point it breaks out. Okay, practical charts we'll be seeing later, but just to know how does a chart look like. So this is your 1T, and there are so many 2T patterns that you'll find. These are all your cup and handle or 2T patterns. wearing first wave and then the second wave. So it should look more like a coffee cup, tea cup. We would enter when the price exceeds this. It breaks this previous high with this one as a stop loss. Entry exit will be seeing later. This is also your cup and handle. Okay. The depth and the time, all these calculations we'll have to see. Those conditions we'll be discussing in the next class. This is all okay. This is already we have seen. Three T. This is your 3T pattern. How is the 3T pattern? This is cup, this is handle. The handle becomes like a cup for the next wave. So this is cup, this is handle. Again, this is cup, this is handle. Okay. That's why it's called as cup handle breakout. Sometimes, very rarely, you will find that first wave, second wave, third wave, and fourth wave. Once in a year, twice in a year, you find such a pattern. These are very high probable trades. If you are a seasonal trader, then such kind of sure shot patterns only you see here. This one. First wave, second wave, third wave, fourth wave, the explosion is going to be really big, The stop loss is very less and the price can just explode like anything. Imagine the spring is getting compressed and it has compressed so much that there is no more compression possible. It has to break out. Just like in a steam cooker. Continuously the steam is getting accumulated continuously. And what happens? The whistle blows. Okay. हाँ जी हाँ डाल दिया था ना स्क्रीनशॉट भेजे देखो नहीं हाल कौन भी क्या ऑर्डर गए हो हाल तो हाँ मैं बताता हूँ आपा को तो सेलिंग फ्रीज में हाँ ऑर्डर हाँ बता रही है वो अभी 9:07 पर ठा पड़ी हाँ Again, sorry for interruption. All right. So cup and handle, cup pattern, cup and handle pattern, cup handle and cup handle pattern. There may be so many such patterns you will find, but there is another condition that we have to look for: the depth of the cup and the width of the cup. The depth of the handle, the width of the handle. But one thing to keep in point, always remember that how many waves that you find, that much high chances of the trade getting success and with a big move. Please note on this point. meaning 3T is much better than 2T, 2T is much better than 1T, and 4T. He doesn't say 4T, 5T and all, he says that is understood automatically. A 4T would be nothing but 2T plus 2T, like that. So how many T's that you find just before the price explodes, that much better it is. It's very likely that the price will sustain, and it is very likely that very quickly you will be able to get the return. But it's very rare to find. Maybe lot of time you need to give to carefully monitor the stocks. Finally, the Darvas box. The stock will be in a tight consolidation for a very long time. It will be trading in a rectangular box. So within Darvas box, you'll be seeing that the stock will be trading in a very tight consolidation. Like yesterday, we have seen the Goldium International. Okay, for 4 years, it was trading in a box like this, and then suddenly a big movement had come. These are not perfect Darvas box. This is good, but excellent pattern to say. This was an excellent Darvas box. If you see, the price has been trading for such a long time, just in this tight box. This is Darvas box. The price has been trading in a tight box for a very long time. This is not VCP because we don't go beyond 1 year, but just to show you, such kind of patterns can be found even on 1 year charts. So such long duration, how much small the height is, how much high the width is, that much better the Darvas box is. So when the stock gets compressed for a very long time, just like a cooker, the steam has to come out. The stock is likely to expand. You have holded the spring for a very long time compressed. Now when it is going to expand, it is going to expand with full energy. That's what you are able to see here. So it says that there is no point in entering the stock when it is in a stagnant period. Only enter the stock when it is coming out of that stagnant period with full energy. And there some point will be there where you may have to exit it, where the condition of moving average or so something like that will get failed. The stock no more is eligible for holding it. So maybe you would have entered somewhere here and you would have exited somewhere out here when the moving averages cross over. That we'll be discussing in detail. So that is still a fantastic return. 40 rupees you buy and 160 rupees you sell. We cannot time exactly at the top. We do not know at here we have to exit. We may think that it may still go here like that. So there will be criteria of a moving crossover and all that, wherein you will have to exit the stock. Okay, that is all. It's already past 9. So in our next session, we are going to understand practically. We'll be looking into charts like this and find out which stocks are currently following the chart patterns that we have been discussing.